Yes, I have.
Morning, everyone, and welcome to this morning's session. Apologies for the slight delay. David was just sorting out the recording, and welcome. If this is your first visit to this series of webinars that David and I have put together, I'll explain a little bit later on how we are sort of structuring them. There isn't an agenda. There isn't a specific program, as it were, for the webinars. But it may help if you perhaps go and look at the recordings from last week's sessions, or at least just the first 10 minutes, because what we don't want to do is spend each webinar just going over what it is that we are trying to achieve in this series. But before we start, can I just remind you all, as if you need reminding, that this business is very risky. Please don't use money that you cannot afford to lose, and in some instances you can lose more money than you originally started with. But I do appreciate that here in the UK and in Europe, with the new ESMA regulations that I think are coming in place today. David, is it today they're starting? 1st of August? Perhaps someone can correct me if I'm wrong. Retail traders there are some extra rules and regulations to protect their capital. It's almost as if we have to be protected from ourselves. But anyway, that's what I'd like to start with. And of course, as always, I'm joined by my husband and trading partner, David, who is sitting next to me. And for those of you who perhaps don't know, this is where we are. Let me just find my tab. Where am I? I've lost myself. Here we are. We're actually here at the moment, sitting in this configuration. So this is the education site where you can discover the details of the Forex program that we have put together. And those of you who perhaps are not, Forex orientated so much, we are looking also to include a program about stocks, but that's something for later this year, because we have to develop our indicators for a platform other than MT5. Although MT5 is a fantastic platform, that it's a multi-asset platform. We have NinjaTrader as well, but the platform really, if you are interested in stock investing and trading and options, is something like TradeStation. But more of that later. Right, let me just go back to the to here. While I'm sorting out my tabs, I'll just pass over to David.
Thanks, darling. Very warm welcome to you all, wherever you are in the world. Good morning, good afternoon, good evening, and it's great to have you join us today. As Anna said, if this is your first time, first of all, an apology. If some of us you do know us very well. We do have two small dogs. Occasionally they join in, and we generally mute the system. So if that happens, apologies in advance. But as I say, occasionally they like to join in. We tend to focus on MT5 in this session. As Anna said, it is a multi-asset platform, and one of the great advantages of it is that if you do want to move away from Forex, if you want to get involved in stocks or indices or commodities, even soft commodities, metals, it offers all those things, but it offers them at a substantially lower margin requirement than if you wanted to trade those things on the futures market through a platform like NinjaTrader. So it's really a great way to dip a toe in alternative markets, other markets associated with the Forex world. And you really don't have to have a substantial amount of margin to cover that particular trading. If you're trading on futures on NinjaTrader, you will. They're big contracts, even with the micro contracts that are increasingly being offered by the CME for things like gold. Some of the currency futures you can get on micro, in fact quite a few of them, generally a tenth the size of the full-size contract. So it's a great place to start, the MT5 platform. And increasingly, you'll find it is becoming very popular now. Whereas maybe 12 months ago, very few brokers offered MT5, now you'll find it is widely available. And if you're looking for an MT5 broker, the best place to start is to head over to a site called 100forexbrokers.com. That's the number 100. And there you will find every broker designated as MT4, MT5, whether they're STP, whether ECN, etc., etc. You can do all the research there, filter on whatever requirements that you have, and you'll find certainly find an MT5 broker there if you're looking for one, and you're just sort of migrating to MT4. I know we've got some customers in the room. Transitioning from MT4 to MT5 is very straightforward. You have it on your user dashboard, and you can do it all yourself in exactly the same way as you would move from one MT4 broker to another. I'm just going to pass back to Anna.
Okay, what I was trying to look for is actually the YouTube channel. We've got two YouTube channels. There's my own YouTube channel under obviously my own name, and the quantum trading one, and there you'll find the recordings from last week, which goes into more detail as to what we're looking to achieve in this series of webinars. And very briefly, I suppose, very, very quickly, what we'll be looking at in every webinar, and looking at charts to explain in more detail what we call the price cycle. And this is very typically a price cycle. This slide comes from our Forex trading program, and a price cycle, the price cycles in every market and every instrument and in every time frame, it goes through the same process as we see here. You have the beginning of a trend over here on the left hand side, and we call a primary trend. Then it will pull back, and then it will go up, and then go up, and then we have distribution, we have a selling climax, and then it will roll over and go down, and then you have, and it'll start, and the whole process will start again. So you have this constant buying and selling. If you don't understand where you are in the price cycle, first of all, on the chart that you're looking to take a trade, you are going to be very, very lost. Secondly, in this webinar, we're going to have a look at a little bit more on multiple time frames, because you can easily recognize it on one time frame, but what happens every time frame is in the context of another time frame. In other words, what is going on in a slower time frame will also impact what is going on a faster time frame. The price cycle, price is what we call self-similar. It goes through this process, as we see here on this slide, as I said, in every time frame. So not only do you have to establish where you are, where the instrument that you're looking to trade, where it is in this cycle, you then have to compare and contrast it with what is happening on a slower time frame, because what will happen is, and it could be at a completely different stage of that price cycle. So, and this causes traders no end of problem. It's what we call cognitive dissonance, because what you might see on one time frame, say the 5-minute or even the 10-minute chart, and then you go up and you look at the hour, the 4-hour, or even the daily chart. So what you might have on a slower time frame, you might find that the what is you're looking to trade is up here. It's in a distribution phase. It's at the top. It's maybe looking to roll over, but way down on the 5 or the 10-minute chart, you have a little slither of this price action that you see at this top, and it could actually be at a reversal and waiting, to move higher. Does that mean you can't take a trade? No. Does that mean you have to wait until all your time frames are in alignment, as it were? Well, that would be fantastic, but in reality, it doesn't happen. Now, on top of that, we also, what David and I have come up with is something that we call the C states. Now, the C states of the market is our way of describing, if you like, the actual the different elements of the price cycle. And if I can just, as I said, where we first came up with it was in this book, which is the Binary Options Unmasked. And what they break down to is that you have a trend. You have a trend with momentum, a trend with volatility, a trend with momentum and volatility. You have congestion without volatility, and you have congestion with volatility. And the basic principles of everything that we explain in these webinars, that David and I believe about the markets, are we all start off. They're all explained in the books, in my books that are available on Amazon, and then all those principles that we've taken and we've built on, that you can find in the Forex trading program. But to get a better idea of what we actually mean by the C states, as I said, I'm not going to go through them in great detail now, but I will refer to them. Is just have a listen to one of the webinars from last week. It's only, is it 5 to 10 minutes, David, or something like that? And it's explained in a little bit more detail. And what we also do in that webinar is, this is a schematic, this is obviously a theory, but what we also did is we overlaid that. You can see that in an actual chart itself. So that's what we're going to do. We're going to have a look at the price cycle in terms of its C states. What is the volume price? What is volume price analysis telling us? What is going on from a volume price analysis perspective in the price cycle and the C state? And finally, what are the indicators telling us? Are the indicators highlighting a potential reversal? Are the indicators telling us that we're going into a consolidation? And then we look at that consolidation, but is it one with volatility, or is it without volatility? And the implication of all this, is it comes down to risk, because what will happen is, if you have a trend with a lot of volatility, the risk of any trade that you're looking to take is going to be that much higher. And the classic pair, if you like, for that is something like the pound yen. And maybe we'll just have a look at the pound yen to see how that is reflected in the chart itself. What that means is, on the pound yen in particular, you will get a trend. You will see the price moving up, but rather than just see these nice sort of gentle pullbacks, as it were, it will be very, there'll be a lot of whipsaws, there's a lot of choppy price action, but it will still be a trend. Now, if you're trying to take a trade in there, just consider what effect will that have on your entry, but more importantly is, how is that going to impact your stop? Because if you have a lot of whipsaw action in a move higher or lower, then of necessity your stop has got to be that much wider. So I'm just going to go to look at some charts. If I bring up what we've got here, and I'll just pass over to David in case he wants to say something. I've turned myself off. Yeah.
Thanks, darling. I think Anna's pretty much covered it there. We're going to go to the charts because there's some nice price action that Anne's got there as well. And also I've got on Ninja, I've got some nice charts on the Aussie. So I'm just going to pass straight back. Sorry, just going to switch screens. You should be able to see my NinjaTrader screen coming up now. Yeah, that's great. And what I've actually done, I've simplified this down to just several tabs at the bottom. One of the nice things with Ninja is that you can run on one workspace down here and have all the indicators just aligned one off the other. And the reason I've just focused on the Aussie dollar, and also I've also got the Aussie yen as well, but this is the Aussie dollar on 5 minute. And just to make the point that we do focus very much on faster time frames, we try obviously to look at the slower time frames. That's not because we believe that faster time frames are the be-all and end-all. They're not. It just makes it easier from a demonstration point of view, from showing, from teaching, from educating. Obviously, things happen a lot faster. Now, this is a really nice example of a cycle that Anna was referring to earlier, and it also introduces, it really pulls together all the elements of, first of all, VPA, and secondly, how the indicators have then been developed to support that analysis and to help you in your trading. Now, this is obviously overnight. Early morning here is really a nice time to be trading the Aussie because you've had news, you've had some momentum, And in addition to that, particularly in the European, when you're looking at things like the Euro Aussie, for example, you get a lot of strong cross flows because you've got the European market open, you've got the Aussie, which is coming to the end of its session. So there's lots of cross flows, lots of price action there. But this is a really, really nice example. It's on 5 minutes, the Aussie dollar. Here we are. This is middle of the night for us. This is 2:30, 2:35 in, as I say, middle of the night, early morning. And the pair's been in congestion for some time. We've got this platform. This is the accumulation distribution indicator on NinjaTrader, which is price-based. It's very similar to the support and resistance indicator that we have on MT4. And what it does is it constantly builds those levels of support and resistance on whatever time frame you happen to be looking at. The obviously, the standout candle is this one here. We get this massive surge in volume at 2:35, huge upthrusting candle, very deep wick to the upper body. It also triggers the volatility indicators, so there's loads of signals here, and also we've got the little pivot, the little yellow triangle, which is basically looking at the price action between three candles either side. So the candle here and the candle here. This is when you'll get a small pivot triggered because, and the same here, what you're looking at here is basically where you've got a higher high and a higher low on this candle as opposed to the two candles either side. And it's just giving you a heads up that there's some short-term weakness coming in or there's short-term strength coming into the market. Just purely, again, as with the support and resistance indicator and accumulation distribution, it's purely based on the price action, nothing else. So we have this massive surge in volume. I mean, this alone is enough to create a signal, an alarm signal that this looks weak. There is some weakness coming into this market. This is massive selling by the market makers. A nice trap move. The market's rapidly risen. You can imagine a lot of traders jumping in here. They get trapped into weak positions up here, closes back pretty much near the open, and you've got a massive signal with a ton of volume under it. The market starts to roll. We've got some strong volume underneath here, but it takes a little while before it starts to break down. Sometimes the market will reverse instantly. Sometimes it will continue in congestion before breaking down. But nevertheless, you've seen the selling coming in under this particular candle. It's associated with further high volume here. And then we start to roll over and off we go down in this candle here. Again, you've got volatility triggered here, but on this occasion, it goes straight through. It doesn't always happen that with the volatility indicator that the market congests. It's what we expect to see, but it doesn't always happen. On this occasion, it just continued straight down. We had an increase in volume. And simultaneously, we've also got the trend monitor. The trend monitor is there precisely to help you stay in trading opportunities. We are looking at one time frame here. Normally you would have two or three. I've tried to make this much more straightforward, much clearer, because as you can imagine, trying to present multiple time frames in a webinar is quite difficult. But obviously what you would have here, you'd have, if you were trading this time frame, you'd have a 5 minute, maybe a 15 minute, maybe even a 1 minute, or maybe go the other way up to 30. But you would have multiple time frames, and that would also be giving you different information. So the trend monitor's transition, the trend line you can see here is starting to dive. Then we move into a congestion phase. So we've got support and resistance building in these regions. It's relatively minor. And then we break down again. And a further leg down in the move, we've got rising volume again. So it's confirming that the move is continuing to remain bearish because we've got a falling market and we've got rising volume. And then we're down into the bottom here, into what is potentially the bottom of the cycle. So we've come from this region up here, the congestion phase. We've seen the bearish trend, and we can call that our primary phase, if you like, because every piece of price action within that cycle has a primary and a secondary. And you then need to understand how to identify whether you're in a primary, whether you're in a secondary, is it a full-blown reversal, etc., etc. We come down to the bottom here. The trend monitor is now transitioning because we're moving into a congestion phase. We've got a strong platform of support being built here. You can see on the trend monitor we've gone from bright red into dark red. These are the transitional colors that appear, and then we're through into bullish momentum as we speak. And the trend line is now climbed above the midpoint and is starting to move a little bit higher. Now that is a cycle, and that cycle may well be a very small cycle within a much larger cycle if you moved out to the hourly, for example, or the 4-hour or the 8-hour. This would be nothing more than a minor reversal, but on a 5-minute chart you've got a complete cycle from the top of the chart to the bottom of the chart. Now there's nothing to say at the moment this may not continue. Obviously what we're going to look at next, we'll move over to the CSI. What is actually happening? We've actually got buying of the Aussie, this blue line. Again, I've got this on 5 minutes, so we are replicating like with like. But we've got buying of the Aussie in here. What we've also got, looking at the dollar, which is the red line, we've got the Aussie and the dollar rising together. Now, when two currencies are rising together, what you expect to see on that time frame is a congestion phase, because if both currencies are moving in the same direction at pretty much the same speed, which they are on this occasion, then there's no force, there's no momentum. In other words, the two legs of the trade are not moving in opposite directions, so there is no trend developing. So what you expect to see, and you can almost look at the CSI without looking at a chart, it will tell you pretty much instantly where you've got strong trends and where you've got a congestion phase. And here we've got a congestion phase because the Aussie here, the blue line, is rising with pretty much in line with the red line, which is the US dollar. So the two are moving together. So for the time being, we don't expect to see that trend develop from the congestion phase. At some point, those two lines, those two currencies will separate and move in opposite directions. And at that point, you will then see a trend develop. For example, if we were looking at pound dollar on this time frame, this is the pound, the yellow line, diving very sharply, and we've got our US dollar rising very strongly. So there you would be seeing a trend on 5 minutes. And the same would also apply to the euro, where you've got the euro, this yellowy orange line here, diving very strongly, and you've got the dollar rising very strongly. In fact, if we just head over to the dollar index chart, I've got this is what's going on right now. This is the same chart. This is the Aussie dollar at the top, again on 5 minutes. And I've paired it up with the dollar index, which you've got below, and you can see how that matches in terms of price action, what is going on in terms of the Aussie dollar, and what is going on in terms of the dollar index itself. And in fact, exactly the same. I think pretty much the same applies. This is the yen index now, again on 5 minutes. Got the Aussie yen here on 5. So this is the Aussie yen against the yen index. And again, the yen index has gone into congestion. We've had this yen buying, which has been reflected in a fall in the Aussie yen. And obviously, when you see that, what you've also got to figure out is how much of that is being driven by the yen and how much of it is being driven by Aussie weakness. And to do that, you come back to the CSI, which will give you some information, and also to the currency array. That will give you quite a bit of information about the pair that you're considering. As you can see here, the Aussie yen is down here at the bottom, and the Aussie dollar is also pretty bearish right now. And if you isolate out the dollar, just see where we are. New Zealand dollar is the most strongly bearish of the commodity currencies right now. You've got the Aussie dollar up here, but you can also see the Aussie yen at the bottom here. So if I just click that back on again, click back to the yen, you can see we've got pretty strong buying of the yen, certainly on this faster time frame, and that's reflected on the array with all the currency pairs aligned to the lower half of the array. And the most strongly bearish at the moment is this one at the bottom, New Zealand yen. We've got the Aussie yen here as well. Just go back to our chart and see what's happening, where it's remaining in congestion for the time being. We've got some resistance above. We've got this support platform below, and we've got also a support platform building here as well. And the transition into that congestion phase is also designated with the pivots. What the pivots do is they do give you a sense of short-term weakness and short-term strength, which is certainly one way to use them. It just gives you a visual as to potential minor reversals, very small reversals on the time frame you've chosen. But what they also do is they give you a heads up on the transitional phase into congestion. So when you get this period of a pivot high and a pivot low, we've got another one here as aligning with this one. We've got another pivot low here. These are all giving you a heads up that we are in congestion. Yes, you can see it, but obviously what you also see it very clearly, very strongly, is in terms of the volume. Now, as we're moving towards London, we're starting to see the volume pick up. This is 7 o'clock on the European Open for us in the UK time. And the nice thing with a NinjaTrader platform, it's a very minor point, but it does help at times, because this quotes to our geographical time. It's very easy to pick out the spots in the market where we are. In other words, we're coming up to 7:30 here UK time on the MT4, MT5 platforms. It's quite confusing because you're often running 2 or 3 hours behind, because that is designated from the server or the broker in terms of time. So it's quite hard to identify particular parts when you're looking back across the chart. But with NinjaTrader, it's very straightforward. And obviously overnight here, this was the Asian session, deep into the Asian session. Volumes obviously much lower. That's what you expect. But the other aspect to volume is also when you get these huge spikes, they will distort what is going on upstream and downstream. And you have to bear that in mind all the time. These volume bars here, really, if you're looking back, the way to do it is to actually look at these and compare them back over here. And you can see how high they are compared to what has gone on prior. So it just tells you instantly, it gives you a visual to remind yourself that yes, these are pretty high volumes. Again, we've got pretty high volume here when you compare it over here. And likewise, we've got some pretty heavy selling under here. The attempt to rally here, you might say, is relatively weak. It's not that strong, but the volume here is decent. Of course, you've also got to remember that we are moving towards London, so the volumes here are picking up per se automatically. So the trend monitor here is in transition. And the other thing you can do with a lot of the indicators, particularly what I've done with the trend monitor, if I just click it on, just pull up that there, and you go down to the indicator itself, I've actually reduced the sensitivity here a little bit, because what I like to do is to have it running through a congestion period and to actually hold that period a little bit longer until the actual new trend starts to develop. So you can adjust the sensitivity. It's a bit like, I suppose, a volume control on a radio, for example. You just turn it up, turn it down. It just adjusts the sensitivity. And the periods at which, or the points at which, the indicator then starts to move from these transitional colors of congestion into the brighter colors of either a bullish trend or a bearish trend. So I thought it was a really nice example. And of course, if you go up the different time frames, you go up to 15, you get a different picture. It tells the same story, but it tells it in a different way. And again, you've got, this was the candle we were looking at on 5. This was the replication of 3 lots of 5 minutes, so 15 minute, ton of volume under here. And away we come from this very strong platform of support. And once you've broken through there, the issue then is at what point you actually get into this particular trade. And that's only a decision you can make. You may have got in purely on that signal. There's nothing wrong with that. You might decide that you're happy to take the risk that, this doesn't develop into a trend for whatever reason. Alternatively, you may be more comfortable in waiting and perhaps jumping in once the pair has broken or the market has broken below this platform of support. And you think, well, okay, I'm going to wait until it's broken. Sure, you're giving up maybe some of that, maybe all of that. If you're on the 5 minute, you may have jumped in on the 5 minute. But if you're on 15, maybe down to 30, you've given that away, if you like. And this is always the issue that you have to deal with as a trader. Are you going to, what's your tactical approach? And also, how does that match your risk profile? In other words, if you're looking at reversals, and let's face it, that's what we want, because from reversals come trends. If you're looking at reversals, then the question you've got to decide in your own mind is, do I want to jump in early? And in jumping in early, I'm going to have to lay out more risk on the table, because the market may well congest for some period. It may reverse slightly, but you're looking at the CSI, you're looking at your indicators, you're looking at the volume profile, you're looking at the price cycle, and you decide that on balance, that's what you want to do. You want to trade a reversal. That's fine. You lay out more risk. If you're more of a cautious trader and you're looking for a trend and you want to jump on a trend once it starts to develop, then the quid pro quo is that it's lower risk, but you actually give away some of that trend, because getting in on a reversal, you'll be getting in early. Getting in on the trend as it's underway, in other words, the train's left the station and you're jumping on just as it's leaving the platform, you've given up some of that trend already. You have to accept that, but the balance, the counter argument to that is obviously you put less risk on the table, because once the trend's underway, you don't have to put so much risk out in terms of your stop loss position. You can make it a little bit tighter, whereas on a reversal trade, you've got to allow the potential opportunity to breathe, and you give it more breathing space in terms of the stop loss. And off we go. Exactly the same trend monitor. You can see here we transition through the dark red, the darker red from this flip-flop phase. A lot of transition, and then we're into the trend lower. Now what we're seeing now is, obviously I'll flip back to the 5-minute in a moment. The 5 will, this trend monitor will now be strongly blue. We're starting to tick up here. The trend line is starting to climb, but as you would expect on a slower time frame, we haven't actually seen that migrate through. That change in trend, if it is a change in trend, has not yet migrated through onto what is our slower time frame. Ultimately, if it is a true change in trend, it will. We've got the platform down here, the little support platform that was built, and we've got some rising volume coming in. But bear in mind, this rising volume is coming in partly because we're moving towards the London Open. Just head back on over to the 5-minute. Just pull that back up again. And that's what we're seeing right now. We're seeing this this transitional. We've not gone back to a darker red, so we're still holding in the bullish. Let's just see what's happening on the CSI. Well, the Aussie looks as though it might be kicking down a little bit, which is actually what you're seeing. You can see here the yen, this line here, this has already kicked down quite sharply. So if we were to look at the Aussie yen, for example, then that trend would be developing much more strongly, that the Aussie is still climbing, and on the yen we've got falling, we've got selling, and the dollar is just starting to kick over. So if we go over to the dollar index here, hasn't really moved much on the dollar index. This is the Aussie dollar still on the top on the 5-minute. So we just have to wait and see what happens. Just starting to roll a little bit, but it's very much in a congestion phase. And obviously, if the dollar is going to fall, then ideally what we want to see is it moving through this area here. These are just two moving average, which are associated with the index. They come with the index on Ninja, and maybe break down through here. If we go over to the yen, let's see what's happening on the yen index. The yen, as you can see, that's why we're seeing a pickup. This is the Aussie yen against the yen index. This is why we're starting to see some stronger trends start to develop in terms of the Aussie yen on 5, because the yen here has been in congestion and looks as though it's potentially starting to roll over and move south. We need to see it move through this region and possibly slide lower in due course. But you can see the reflective price action of the index against the pair, particularly on the Aussie. Just going to break off for a moment, see if Anna wants to add anything to that. Just going to switch back to Anna on MT5, but with us a moment.
Thank you, darling. In fact, while David was looking at the Ninja Trader platform, I finally sorted my my MT5 out, and in fact, I've got a couple of workspaces I'd like to show you, and really just to highlight what I was saying earlier about how to see if you like, the examples of the example of the schematic that I showed you earlier, how that actually translates into a chart. And in fact, I've chosen the euro dollar. Now, another reason we've actually started this session a little bit earlier, normally we start just before the London session, and it's because 7 o'clock our time is where Europe starts, isn't it, David? Yeah, so Europe opens, and you know, there's just as it's just as much going on there, more Eurocentric, if you like, as David said, with Asia closing as well. And I also want to bring in a renko chart, because what a renko chart does, it really shows you the geometry, if you like, of the price cycle. It's very clean. It's a very clean chart. It's only price action, so that you can begin to become familiar with the concepts that we are trying to explain to you here. And the reason I've chosen the euro dollar is obviously because it's we're in the European session while we wait for London. And what I've got here, if I could just go quickly, I've got a CSI, our currency strength indicator, because I'd like to see what the individual currencies have been doing across the time frames. Has there been strong buying or selling in a particular currency? This is even before I look at a pair. And the two most important currencies on the currency strength indicator and in the market are the dollar and the Japanese yen, because those two currencies will tell me an awful lot about what is the general sentiment in the market. Now, as we can see here, this is the magenta line of the yen. This is only the 3-minute chart, and there has been some, looks like some quite strong selling. I know there's been quite strong selling because that line is very sharp. It's very, it's got a steep angle to it. I mean, similarly, this is the New Zealand yen, the white one. That also tells me that the market's been, traders have been out there buying the New Zealand. Maybe they've been buying the New Zealand more strongly against the Japanese yen, but a falling Japanese yen also tells me about general sentiment, and that's telling me that possibly the market is in a bit of a more positive mood, if you like. So that's the first thing I like to do. And also there is another issue with being a forex trader, and especially if you've only just started, and that is yes, you have these principal currencies as we know, but they then break up into 28 pairs. And I know it doesn't seem a lot when you compare 28 with the hundreds and thousands of stocks that are out there, but it can make your decision as to what to trade actually quite tricky. And a lot of traders start and they don't know whether, should they try and find a trade in any of the 28, or should they focus on maybe on one or two pairs. And there's no easy answer to this, but very broadly, what you should be considering if you're starting. First of all, understand what the dollar and the yen is doing. That's the first thing, and their role that they play in this market. Secondly, focus on the pairs, the currencies and currency pairs that are likely to be moving in the session that you are looking to trade. So if you are in in the Northern Hemisphere and you're going to be looking at Europe and London, then it probably makes more sense to look at something with the pound and obviously with the euro. Although I have to say, the Aussie can also move in this session as well. The Aussie is one of these currencies that will move obviously in Asia, because it's one of the local currencies, but it does have also this ability to move throughout the 24-hour cycle. Now you can check out what moves and what doesn't move, and the volatility of these currencies. There's at investing.com, they've got a really nice little tool there, and it will also break it down into which days the currency and currency pairs move the most, as it were. So we cover all this in the program in very great detail, because once you've established whether you are going to focus on maybe a little handful of pairs, then what the currency strength indicator will tell you is, it will tell you at an instant, what is my currency and currency pair doing at this particular moment. It gives you the quick heads up. You don't have to go and look at lots and lots of charts in all time frames. You can just flick up and down the current the CSI and its sister indicators, which are the matrix, the heat map, and the currency array, which we'll look at on another time. And the other reason I like MT5 is you do have a much wider choice of time frames, just like NinjaTrader. Now, the reason I've chosen the euro dollar, because it's had a really nice move lower, and it came to a slight pause while David was speaking, and now it looks as though the downwards momentum is continuing. I've got the 3-minute CSI here. I've got the euro still falling, and I've now got the dollar rising, but it looks like it's the euro has, certainly in this time frame, has probably reached it's been overextended, it's oversold. You have to always remember this is a market of mean reversion. Currency pairs, they move, they pull back, they move and they pull back, and there's constant expansion and contraction, and each pair will have a given an average number of pips that it will move at different times of the session, the trading day, and that's what you have to understand, because if you're trying to take a trade in a pair that really is only moves 20-30 pips over 3, 4, 5 hours, trying to take a trade in that pair is going to be much more difficult. But just to return to the price cycle, this is the euro dollar, this is the 8-hour chart, and the reason I like the 8-hour chart is because it actually breaks the sessions into 3 nice neat little in 8-hour chunks, as it were. This is the chunk that we are in at the moment, and you can see overall in this 8-hour chart, what are we actually looking at? We're actually looking at quite a long congestion phase. In fact, the congestion phase that goes back to, we see here, to the 12th of June. It's almost now, it'll be 2 months in a week's time. It's a reasonable range. We've got 1783 to the upside, and we've got 1507 to the downside. So it's quite a wide range. But if you look back to the left of the chart, this is what I meant by a trend. Now, this is a trend, obviously a trend lower. We had a pullback here, and it's a trend with a degree of momentum. We know there's a degree of momentum because we have this big volatility candle here. We have this minor pullback here, but we've got, if you define a trend as lower highs and lower lows, certainly a downwards trend, that would certainly fit the definition of what we mean by a trend. Then we have a pullback in this trend, we have a reversal, and again, even within this 8-hour chart, though that reversal higher within those individual candles, there would have been opportunities to take trades, but those trades would not have been equal because, as I said, this is an 8-hour chart. So each of these candles is one of the sessions, and you can see by obviously the smaller candles, the narrower candles, they would have been in the Asia session. Then we have the resumption of this trend lower until we have the reversal down here. But let's move over here. We are in this congestion phase, generally speaking, for the euro dollar. And if I bring up the dollar index, this is what we are seeing reflected. I'll just decrease that slightly so you can see. There we are. So if you like, it's the mirror image of what you see on the euro dollar, and the reason you see that on the Dixie is because the euro has the biggest percentage. It's got the biggest weighting in the Dixie. So if you put one chart on top of the other, of the euro dollar and the Dixie, you will see a mirror image. And if we go back here, this in fact goes back to April because this is a daily chart. And again, we have a nice smooth trend. We have this pullback, then we go higher, then we have the reversal, a pullback here, then we have this big volatility candle. But generally speaking, since June, we were looking at 12th of June on the 8-hour chart. This is the 8th of June. What has the US dollar done? It has been bouncing about in a relatively narrow range. Now, the implication, as I said earlier, is when you, as a trader of Eurodollar, because Eurodollar, there are tight spreads, you know, all the brokers offer it. What do? You know that on this price cycle, on the 8-hour and going up to the day, you are in this congestion, but looking at your support and resistance indicator, however you measure, however you define your support and resistance, these lines will tell you where this price is likely to be moving next, as it were, because it has done so in the past. So, for example, for Eurodollar, it's just gone through 1639 on the 8-hour. The next target, if you like, for this one is 1690. So the levels, your levels that are shown on the slower time frames, will help to determine where the price is likely to stop in the faster time frame. Now, that's the 8-hour. I also have an hourly chart, because obviously, you know, you've got to, as I said, it's a price cycle within a price cycle within a price cycle. So it may get to 1619, but where is it likely to stop before then? And this is where we have developed, we base our levels on our own support and resistance indicator, on the NinjaTrader based on accumulation and distribution, on MT4 and MT5, again, purely price driven. And the lines that are painted by the indicator, the solid line tells you that it's a stronger line of support and resistance, and that the hatched line saying it's slightly weaker, so it's not going to take a lot to go through it. But we've also we've overlain that with yet another indicator based on the Camarilla principle, which breaks the price up into these 8 levels, 4 for resistance and 4 for support. And in between, we have what we call the R1 and the S1, and we call a buffer zone. This is where price goes into temporary congestion. It's waiting to go in one direction or another. But what the indicator does is it will tell you, it highlights where is it going to stop. And if it's going to, it's clearly marked, it's going to get to 1630. It is probably going to pause at 1630. Why? Because we have this, as I said, the Camarilla line. We only need to look to the left of the chart and see why. If I just reduce that down, yeah, 1630. We've got some prices stopped there in the past, and if we look further back, support and resistance lines happen because that's where price has stopped in the past. It's paused, waiting to either continue or to reverse. And the reason it will continue or reverse, it will be driven one way or another by whatever the banks want to do. Is there a piece of fundamental news? But having the hourly chart or a slower time frame on your screen, it gives context to what is happening in the fastest time frame that you may be looking to take a trade. So down here I have the 3-minute chart, and again we see exactly the same pattern of price of the price cycle. This is the pause that we had. This is the we had this sharp move lower when Europe opened. Then we had this congestion. It just moved sideways. Now we've had this kick lower again. Often when a pair or an instrument is going to reverse, it doesn't reverse immediately. There's always an overextension of that price, and it'll have another run in the direction, and then it will go into congestion again, and then start to reverse. And on these 3 candles here, we've got a volatility candle as well. We've got quite a lot of volume underneath it. Then we have another one, further volume, but as you can see, the volume to the downside is actually dying away. It's being absorbed. The selling is now being absorbed. So maybe we are going to see a potential reversal. And our CSI is also telling us that, because what have we got here? We've got the euro right at the bottom, and this is what I mean by this overextension, and we've actually beginning to see some buying of the US dollar. So maybe, yes, you know, we are coming to a point of potential reversal. Now, I said about a renko. What a renko chart does, it doesn't have time. This is based on a 2-pip move. So every one of these little bricks is paints when 2 pips have gone through the market. And what a renko chart does, it's a great chart to actually see a price cycle, a clean price cycle, and you can see a trend with a degree of momentum but no volatility. Then you have this move higher. It replicates what you see on the chart, the time chart, and this is this relatively smooth move lower. The trend monitor stays bright red. Now what we're seeing here is when the tails start to appear on these candles, it means there is there's something going on. Activity in the market is beginning to pick up. Because these are 2 pips, the 2 pips will only the brick will only display once the 2 pip has gone through the market. Now in the Asian session, 2 pips might take 3 minutes, may take 2 seconds, may take 4 minutes, which is why the renko is so exceptional, because what you're looking at is you are sensing the momentum in the market. As momentum picks up, volatility is accompanied usually by volatility, and it will either, and if you're on the right side of the market, it will help you to stay in the market, because with volatility you get candles with lots of wicks and just a sort of general racking about as the insiders take advantage of traders either trying to jump in on trades before the price is reversed. Now with the way we've developed the renko for MT5 is actually unique. What you have to do is you open a minute chart, which I have done here, and you've actually got 2 options. You don't have to have a preset value for the renko, because the indicator also allows you to use an ATR function. In other words, the indicator itself decides the value of that brick based on average true range. I just happen to have it on 2 pips, because what I found from personal experience is when a currency pair is in a long-term congestion, or maybe the range is narrowing all the time, it's best, and you want to take a trade, it's best if you have a small number of pips going through the market, and it kind of smooths out any the sort of choppiness that you can get. And what happens is, I've actually got a renko open, but if I just take that away, so what happens is, this is what happens when you apply the indicator to the minute chart for the fixed value, and it will tell you, all you have to do is you click that and instantly the renko chart will appear. You don't have to do anything else. I actually have a template that I've created for it, and that's it. And that is the other unique function of our version of a renko chart for NT5 is, and I believe I'm pretty certain, in fact I know no one else has actually done it, and that is you can apply standard indicators and our own proprietary indicators to it's really applying indicators to an indicator. And I don't think, darling, no one else does that, do they? No, I don't think anyone does that. And what a renko also does is, now we've had this really strong move lower. We can see the strong move lower in the euro dollar. This is the as I said, by choppiness. My trend monitor is not is a little bit more sensitive than David's, which is why I keep getting the colors flopping in and out. And we can see here there's a kind of pickup in momentum. Now the pickup in momentum could be that there's going to be another leg lower, or maybe if this according, if we're seen on the CSI, possibly we're reaching a potential reversal. And also, as we're coming up to the London Open, all sorts of things happen in this run up to the London Open. So if you were in this trade now, and you could say, well, where would you have got in with the renko? And here it's really a matter, as I said, as a matter of judgment, because we come to our charts at all times of the trading session. Personally, what I look for is I look at the indicators. I also look at my trend dots on here. We've developed the trend, these little dots here, when they start to change color, and I look it looks as though the move is underway. Then I would say, yep, it's possibly time to take a potential trade. Where is the stop loss? Well, the levels the levels are clearly defined, and assuming it all matches up with my money management, you would put your stop loss in. Next question is, where is this price going to? Where is it heading for? And this is where your slower time frames come into play, as it were. We've got the hourly chart here. We've seen it here, 1630. In fact, 1630 was also the level on the 8-hour chart. So 1630 is actually at 60. Is it at 1631 at the moment? It's actually got there. I haven't. Where are we? Yeah. So it's at 1630 at the moment. So we know in advance. We can anticipate where this is going. So had you decided to take this trade to the downside based on the analysis, based on using CSI, or if you don't have a CSI, based on what your analysis of the price cycle and what you can see in the price cycle in multiple time frames, you know 1630 is a significant pause point at the very least on the 8-hour chart. Maybe you should say, well, if it gets there, maybe I can come out now. I've also got, as I said, I've also got the London Open to consider in 4 minutes time, and judging by all the shenanigans that go on in the London Open, possibly this may be a time to say I'm out. I'll wait for London to open. I could always go back in. And what's interesting here is looking at the 3-minute chart. Is, as I said, we had a kind of slight fall off in volume under this down bar. Now we've actually gone below the S4 on Camarilla, and R4 are very significant levels. Under the protocol, any price that goes below and closes S4 or above R4 is considered a valid breakaway or breakout trade. That can happen, not all the time. What can happen, particularly if it happens around these crossover times where you have a lot of cross flows, with, as I said, Asia, Europe, and then New York, is often the price will go back and retest at that level. Now, what that tells you to the upside, so if you've decided, no, I'm actually going to stay in there because I think it's gone through 1630, I think it's going to go lower. The S4 actually, if you were trailing your stop, you would take it down to the S4 level, because at the very least it will go back and retest the S4 level. Right, anything, David, is there anything you want to say on that?
No, that's it.
And as this is London, I've also got cable going as well. Let's have a look what's happening over there. Okay, now my renko chart here is already started. Let's just put the template on. There we are. And let's have a look what's been happening here. Has there been a better move on the let's have a look at our chart here. Let's have a look what's happening with cable. Not so. There we are. Again, in a congestion, if you like, but very, very different. A very different look to what we had on Eurodollar. And if you've got the opportunity to look at the 8-hour charts, if you've got MT5, even if you don't have MT5, by the way, if you go along to the MetaQuotes site and download you can just download a demo version of the MT5. And if you don't have the pivots, or you don't have any of our indicators, then put the fractals on. And just draw some lines manually draw some lines, put a couple of moving averages on, but look at the 8-hour chart for all the pairs, scrunch it up a little bit like this, put the volume underneath it, and just see what you can see. See what the pair is telling you in terms of the price cycle, because it will reveal so much to you. And obviously with cable and all the pound, and we've got the BOE later on this morning, and of course we've got Brexit in the background. Right, I'm going to stop there. I'm just going to pass over to David, and then we're going to wrap up, and we will be back in this afternoon for the New York session, and we'll just probably revisit what not revisit, but we'll look at what actually happened to the charts, the euro dollar and the pound dollar at the London Open.
Sorry, that's it. Right, we're going to have to run. Before we do, just to highlight all the various sites where you can find all the information. If you want further details on the quantum indicators, you'll find them all over at quantumtrading.com. There are loads of videos, there are loads of explanatory pages about how to use the indicators, how to apply them. You can go and check out how easy it is to change the settings, etc., etc. It's all there. So there's lots of information there. You can buy just one indicator, or we have special deal bundles. One of the bundles, for example, just to highlight what we've been looking at, is particularly with the trend monitor and the trend dots. They are fantastic indicators working together, because what happens is the trend dots change first and then the trend monitor changes thereafter. And the renko is a brilliant chart to apply them to. The trend dots really, really do work fantastically well with the renko in combination with the trend monitor. But you'll find on the site there are bundled deals, and if you do want to buy any of the indicators, you're buying them on it's a single payment. Whether you pay that over three months, a lot of the indicators are split over 3 months, or whether you pay outright for it, that's it. You never pay us another cent. There's nothing else to pay. You own them for life. Just moving along, what that price includes is 24/7 support, 365 days a year, and it truly is that. You'll get support at the weekends. You'll get support pretty much any day you care to mention, Sundays, and that response will be pretty quick from the guys on support. Generally certainly within an hour, and it's generally within a few minutes, to be perfectly honest. So we pride ourselves on our support. We pride ourselves on our indicators. We have customers who trade 24/7 around the globe. That is why we offer that kind of level of support, but it's all included. You don't pay us for that. It also includes all future upgrades and enhancements. Platforms are constantly being tinkered with by the providers. They're being upgraded. I mean, we had to port everything from NT7 to NT8, for example, which was a massive undertaking. We've ported from MT4 to MT5. MT5 is constantly bringing in updates. It means we can do other things with the indicators. You don't pay for any of that. That's all wrapped into the price. It's all future upgrades, whether they're indicators themselves or platform specific. And the other thing also is we recognize that as a trader, your preferences change. We get a lot of our customers who migrate from MT4, MT5 across to NinjaTrader. Another platform we're developing in the future is into TradeStation, probably later this year. If you buy one indicator on MT4, for example, and you then decide, I think one of the questions earlier on was about the NinjaTrader platform. Suppose you start with MT4, MT5, and then decide in the future you want to move to another platform, to NinjaTrader. You do it, it's free. There's nothing to pay. We don't charge you. A lot of companies will charge you for that. It's a rip-off. We don't charge at all. So basically your investment in your indicator is always fully protected. Just moving on to the next one. This is unique. If you invest with us in the full package, whether that's on MT4 or NinjaTrader, you get all future indicators free. We're literally launching the NinjaTrader versions of Renko and the Camarilla, which will be available this week. All our NinjaTrader customers who are on the full package will get those free of charge. All the MT4/5 customers who've been with us for a long time, they get all the indicators free. Those who started early doors with us, they've had 6 or 7 indicators for free. They just get added to your user dashboard. That's it. You know, don't pay us. So whenever we develop new indicators, you get them free. And if you want to upgrade either to buy further indicators, or you want to upgrade to a full package, for example, or you want to move over to the QTE program, we're always happy to credit you for whatever you spent with us. So it's not a problem. You're not going to lose anything you spent with us. And second licenses, if you want to run 2 in parallel, are 50% of the first. Finally, just on quantum trading education, excuse me. I think we got it on the last slide, have we, or not? You got another slide? There we go. If you're interested in the Forex program, you can find all the details over at quantumtradingeducation.com. We believe it's the most comprehensive education program anywhere in the market. Basically, those prices include all the indicators. So for $13.91, you're not only are you getting the full set of MT45 indicators, you're paying $497 for the education, and the same on NT78. The only reason the NinjaTrader is a little bit more expensive is purely because we have a tick speedometer indicator for tick charts, which you don't have on the MT45 platform. There's a huge array of videos. There are PDF downloads, podcasts. There's all sorts of information material in there. It's a massive program, and you just take it at your own pace, but it does include the full suite of indicators with all that applies. And so if you've got 1 or 2 and you want to upgrade to the education, we can credit you for what you've had already. Absolutely no problem at all. That's it. We are going to have to run. Thank you so much for coming along today. I hope you've enjoyed it, and we look forward to seeing you again soon. And you'll find the recording up on the YouTube channels later in the day, so you can go and watch it there if you want to have a rerun, and you're not here, but if you missed it, you'll be able to watch it later. Thanks indeed, and see you soon, and bye for now.